Hello everyone and welcome back to Nishma's Area Lunch. In today's session, we will discuss second problem on operating cycle method. So let us quickly go on to the problem. ABC Limited sells its produce on gross profit of 20% on sales. The following information is extracted from annual accounts. Sales 3 months credit 40 lakh, raw materials 12 lakh, wages 15 days in arrears 9 lakh 60,000, manufacturing expenses 12 lakh and it is 1 month arrear. Administration expense 1 month arrear 4 lakh 80,000. Sales promotion expense half yearly advanced 2 lakh rupees. The company enjoys 1 month credit from suppliers of materials and maintains 2 months stock and 1.5 months finished goods. Cash balance of rupees 1 lakh is to be maintained. Assuming 10% margin for contingencies, find out the working capital requirement. Cost of sales may be taken for computing debtors and stock of finished goods. So this is a question. Now let us critically analyze the question. So here in this question you can see that sales, you have a credit period of 3 months, that is debtors. Okay, it refers to the debtors, credit allowed to debtors. Then you have raw materials, wages, and wages it is given in days, 15 days, and further no information is given regarding the calculation of weeks or days or whatever the period of operating cycle. So here we can take assumption that is 15 days is equivalent to half a month. So this assumption may be taken and you must note it clearly in your solution. Alright, so next one is manufacturing expense and it is in arrear for 1 month and it's 12 lakh. Administration expenses also in arrear for 1 month. So all these form come under which head? Creditors for expenses. Alright, then sales promotion expense is half yearly advanced. So here it is advanced. That means what? It is prepaid expense which is an asset to be considered. Okay, so moving over to the paragraph, the company enjoys 1 month credit of credit from suppliers, that is creditors for raw materials. This implies creditors for raw materials, then and maintains 2 months stock and 1.5 months finished goods. So the raw material is kept in stock for 2 months and finished goods is kept in stock for 1.5 month. Okay, then cash balance of rupees 1 lakh is to be maintained. Okay, cash balance. Okay, so you have a cash balance of 1 lakh. That should also be noted. Balance forms a part of current assets. So while computing working capital, this amount, this 1 lakh should also be taken into consideration. Alright, now assuming 10% margin for contingencies, find out the working capital requirement. So what is this 10% contingency? So that 10% margin for contingency should be added to the net working capital for calculating the working capital required. So first you have to calculate normally the working capital, that is the net working capital, and then you have to find 10% of that and then you have to add it with the working capital that you have found out. Now you will get the working capital required. So that we will see when we reach to that point. Okay, so this is a question, and also one more point you have to note, that is cost of sales. Cost of sales means what? Total cost. Okay, it's nothing but total cost. So total cost may be taken for computing debtors and stock of finished goods. That should be noted. Debtors, you know that debtors calculation is made on what? Total sales. We avoid the profit on it. Alright, unless otherwise specified in the question. So here there is a change. You have to calculate debtors in cost of sales or total cost. Along with that, you have to calculate the value of stock of finished goods also in what? Cost of sales. So normally we compute stock of finished goods in selling price, or the amount will be given in the question. But here it is specifically said that you have to compute the value of stock of finished goods on the basis of total cost. And you know that 20% is your profit percentage. Alright, so 20% makes the profit, means what? 80% is the total cost. Total cost. That means selling prices, total cost plus profit. So you know that 100% is your selling price. 100% is your selling price, and you know the profit component, which is 20%. So remaining 80% will be total cost. Simple logic. So this is how you will calculate. So you have to calculate debtors. When you're calculating debtors, you have to take 80% of 40 lakh. And similarly, for calculating finished goods, you have to take 40 lakh into 80% for calculation. Alright. So let us quickly go on to the solution. So here we have the current assets. Raw materials, it was given 12 lakh and it was kept in stock for 2 months. So 12 lakh into 2 by 12 will give you 2 lakh rupees. Then finished goods, it was given 40 lakh of sales, 40 lakh. Then for finished goods, no other information was given with relation to finished goods. So we consider the amount of sales as finished goods. So finished good, that is sales, was 40 lakh, and out of that you were to calculate 80% of that. That is the total cost of sales. So 40 lakh into 80% into it was kept in stock for about 1.5 months. So 1.5 divided by 12, that will give you 4 lakh rupees. Now debtors, same way you have to calculate debtors on cost of sales. So you take 40 lakh, that is sales into 80% into 3 by 12. Credit allowed to the debtors were 3 months. So 40 lakh into 80% into 3 by 12, that will give you 8 lakh rupees. Now prepaid expense, you had a prepaid expense of sales promotion, which was prepaid for half yearly. So you get sales promotion expense was 2 lakh, and 2 lakh into 6 by 12, it was paid in advance or half yearly. So 6 by 12, so you will get 1 lakh rupees. In addition to that, you also had a precautionary cash balance of 1 lakh rupees. So that should also be accounted. So when you add all these things, you will get a total of 16 lakh for current asset. Alright, so total current asset is 16 lakh rupees. Now let us analyze the creditors, or the current liabilities. On to the current liabilities part, we have creditors for raw materials. It was given 12 lakh against raw materials consumed. So that, and in the paragraph it was given creditors allowed 1 month's credit. So 12 lakh into 1 by 12, so you will get 1 lakh rupees. Then we have creditors for outstanding expenses, and we have 3 categories. First one is wages. Wages, it was 9,60,000, and it was told that it was in arrears for 15 days, which we considered it as half a month. I told you to write assumption regarding that. So 9,60,000 into half a month, half represents that, into 1 by 12, half of 1 month. That is what I have written here, half of 1 month. So or else you can also straight away write it as 1 by 24. That is 12 into 2 is 24, right? So 1 by 24 also you can write. To avoid confusion, I have just splitted that. That is half of 1 month. So when you take 9,60,000 into half into 1 by 12, you will get 40,000 rupees. Then we have manufacturing expenses. Manufacturing expense is 12 lakh, and it is due for 1 month again. So again into 1 by 12, you will get 1 lakh rupees. Then coming to administration expense, you have total of 4,80,000 rupees, and again it is due for 1 month. So 4,80,000 into 1 by 12 will give you 40,000 rupees. And if you take the total of all the current liabilities, it will amount to rupees 2,80,000. So, for calculating net working capital, you have to deduct this 2,80,000 rupees from your total of current assets, which is 16 lakh. So, when you deduct that, you will get a total of 13 lakh 20,000 as your net working capital. The question is not complete. You were asked to keep 10% margin for contingencies. It is like provision. So you have to find 10% of 13 lakh 20,000, which is your net working capital. You have to find 10% of that, which will amount to rupees 1 lakh 32,000. So you have to add that margin with this net working capital. So you will get a total of 14 lakh 52,000, which is your required working capital. So this is how you will solve a problem when you are given margin of contingencies. You will solve it similarly as we have did the previous problem. Only one difference, that is when you find the net working capital, you have to calculate the amount of contingencies, which will be given in percentage. So you have to find that particular percentage of net working capital, and you have to add that with the net working capital to find out the required working capital amount. In our question, the percentage of margin of contingencies was 10%. So we have calculated 10% of the net working capital, which is 1,32,000, and you have added that with the net working capital. So that's it. I hope this video was helpful for all of you, and do subscribe to my channel for more videos. Thank you.